Hello and welcome to this session in which we would look at several audit procedures that specifically deals with the owner's equity cycle. Here are the procedure. And for each procedure, we are going to state the purpose and the type of misstatement to uncover. Now, this could be a CPA exam simulation. How so? You could be giving a statement, and at the end, you'll be given a box, and from that drop-down box, you will have a list of purpose and the type of the misstatement, also a drop-down, and you will select the misstatement. Now, why is this exercise beneficial? Because this exercise will tell you the audit procedure. So, okay, that's what you are doing. The answer is, why are you doing this? And if you are doing this, if you are undertaking this audit procedure, what type of misstatements you are uncovering. So this will help you understand the purpose of the procedure, the purpose of the content. What am I dealing with? Am I dealing with the general ledger account? Am I dealing with the director meeting minutes? Am I dealing with the articles of incorporation? And what does each one of these items shed on the audit process? Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Our audit course is best for online students and students who are struggling in their audit courses. We cover the essentials from audit reports, internal control, ethics, evidence, sampling, planning and materiality, assurance and non-assurance services, and of course, the accounting cycles. Our comprehensive course includes lectures, multiple choice, true-false questions. Go ahead and start your free trial today. We are here to help. Your success starts here.
Looking at the first procedure, read the company's articles of incorporation and bylaws for any specific conditions to owner's equity. So that's the audit procedure. What is it? Review articles of incorporation and bylaws. For what purpose? So when you review this, what will you find? You will find about what type of stock can the company issue. What type? A, common stock B, voting, non-voting, description of the stock, the par value, under what circumstances can we issue those stocks. So the articles of incorporation and the bylaws define what type of stock a company can issue, whether it's common, preferred, or both, or different classes like Class A, Class B. Some corporations such as Google and Facebook, they might have non-voting shares, and the details should be crystal clear in the bylaws and the articles of incorporation. So because a lot of students confuse articles of incorporation with the board minutes. Board minutes is once the company is up and running. These are activities that takes place as the company is operating their business. Articles of incorporation are created when the company is born. So you will have basic information about the type of stocks you can issue, its description, and under what circumstances. What to uncover? What's the purpose? Well, improper or incomplete description of stock types. If we look at the disclosure, we can compare the disclosure to the articles of incorporation to see if there's any issue. We could also see if there's any unauthorized outstanding stocks. If we are issuing stocks that they are not in the articles of incorporation and the bylaws. Think of the articles of the incorporation and the bylaws are the internal Bible of that corporation. The rules are set in there for the corporation itself. So this is what we will uncover. Let's take a look at this audit procedure. Review and document all changes in owner's equity account throughout the fiscal year or the calendar year, clearly explaining the reason behind each transaction. So what are you doing here? You are analyzing the changes in owner's equity accounts. For what purpose? Well, the purpose is determine the proprietary of changes in the accounts and to verify their accuracy. You are looking at the changes, you're analyzing the changes. What are the equity accounts? You could be analyzing common stock, retained earning, dividend, and those accounts, they would need careful review. For example, you're looking at common stock. You would maybe look at the beginning and the end. And if it's the same, there should be no change. You would look at retained earning. You're analyzing the changes in retained earning. You're going to have a beginning retained earning. You might have net income. You might have dividend. You might have a prior period adjustment. And you're going to have ending. So you're analyzing the changes. For example, if the company issued new stock, by analyzing the changes, you can see that the company issued new stock. If the company retired old shares, you will see that those shares are deducted from common stock. If the company declared dividend, you will see this in retained earnings. So what you are doing is, the purpose is to do what? To determine the propriety of the changes in the account and to verify whether they are accurate or not. What are you trying to uncover? Well, you're trying to see if there's any issuance or retirement of stocks without proper authorization. So when you're looking at common stock, and the beginning is 100,000 and the end is 120, and let's assume the only thing is 20,000. Ask yourself, was this 20,000 of additional common stock authorized? Also, we're looking at the proper valuation. You're looking at the figures to see if those figures are correct, and you are looking to see if the dividend computation is correct. The same thing, when you look at retained earnings, you would see that they paid dividend. You want to recompute the dividend to see if that number is correct. So it will help you cover few things by analyzing these accounts. What should you do now? You should go to Farhat Lectures, look at additional resources, lectures, multiple choice, additional resources that's going to help you, whether you are an accounting student, CPA exam candidate. The best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.